Hey, what's going on, everybody? Welcome back. It's Travis here with JT Wealth. Now, can you imagine what you would do with $200 billion, or how you would invest $200 billion? Well, in today's video, we're going to talk about a pension fund company who's doing just that and where they've recently decided to put some of their money. So let's get into it. All right, welcome back, everybody. Thank you so much for joining me. Hopefully you find something of value in today's video. And if you don't mind, take 2 seconds out of your day to give me a big thumbs up, hit that like button, and consider subscribing to the channel if you haven't already. Now, I think for most of us, we're more often than not trying to figure out what to do with a couple $1,000s, maybe some of you a couple $100,000, or even $1 million for the rare few people who may watch this channel who have $1 million. I probably need your advice, not the other way around. But regardless, in today's video, we're going to talk about a pension fund company out of Canada who's handling nearly $200 billion in assets and where they've decided to place that money recently with 4 big stock picks. Now, obviously, people that run large pension funds, hedge funds, something to that effect, they are hiring really well-educated professional financial advisors and financial professionals. So when they handle money, they know they're doing it for the long term. They're dealing with people's retirement money. So where they place their money is very important to them, because not only do they want to beat the benchmarks of other hedge funds and other pensions, but they want to make sure they make their clients money, because that in turn is how they make their money. So let's check this article out and get right into these 4 stocks. All right, and this came out of Barron's earlier this afternoon, and it says, huge pension fund makes big bets on Apple, Microsoft, Shopify, and Tilray stock. Okay, the giant Canadian pension recently made major changes in its biggest investments. Now, the company we're talking about is British Columbia Investment Management, and they raised their stakes in Apple, Microsoft, and Shopify while starting a stake in the marijuana stock company Tilray, and that's all in the second quarter. Okay, BCI is the pension, as the pension is known, disclosed these trades among others in a form it filed with the SEC. Now, BCI, which manages $160 billion in assets, did decline to comment when reached out to by this article and the person who wrote it. However, that 160 we're going to see later on from the BCI website, that's actually a little bit lower. They're closer to 199 billion. But the pension bought 317,253 additional Apple shares to end their second quarter with over 3 million shares of Apple alone. Now, Apple stock has gained 3.2% in the first half, and so far in the third quarter has added 8.9%. And shares haven't necessarily kept up with the market this year, as the S&P 500 index, as a comparison, has risen 14.4% in the first half, and so far in the third has gained 4%. Apple is showing down a little bit in the aftermarket right now, but they still have over 7% potential upside based on the moderate buy rating of 26 analysts in the next 12-month period. Also, as I mentioned in my video earlier today, Apple is pushing out the iPhone 13 in September, so I do expect some big moves from Apple in the near term. The second big purchase BCI made is 444,580 more shares of Microsoft to end their second quarter with 1.7 million shares of Microsoft alone. Now, the stock has soared 21.8% in the first half of 2021 and so far has gained 8.1% in the third quarter alone. Microsoft fiscal fourth quarter, reported in late July, was strong, and the software giant also sees double-digit revenue growth ahead. It could benefit from sales of its Office software packages and from its LinkedIn unit, which could see increased worker mobility, job listings, and ad spending. Microsoft is showing almost 10% upside in the next 12 months, with 26 ratings giving it an absolute strong buy. There are 0 holds and 0 sells here. They are down slightly in the aftermarket, but we're looking at an analyst price target of about $322.75 in the next 12 months. The third company BCI moved on is Shopify, and they're obviously a provider of cloud-based e-commerce software, and they soared 29% in the first half, and so far in the third quarter they added 2.5% to that. Now Shopify remains a play on online shopping, and one analyst thinks the shares should be a core investment holding. Earnings have been strong, but investors worry that Shopify won't be able to maintain its phenomenal growth during the pandemic. But one big investor in Shopify stock remains upbeat, saying a lot of businesses realized during COVID that they needed to have a web presence, and I think that's permanent, said Matthew Moberg, who's the lead portfolio manager of Franklin Dynatech Fund. Now, the pension bought 80,352 more Shopify shares to end their second quarter with 192,440 shares of Shopify alone. Shopify showing fantastic upside potential of 16.5% in the next 12 months, with an analyst price target of $17.34 and 74 cents. They have a moderate buy rating with 26 ratings, 16 buys, and 10 holds, no sells at all, and are up slightly in the aftermarket today. Okay, the fourth company we're talking about today, the fourth stock, BCI initiated an investment of 858,264 shares of Tilray in their second quarter. Now, it hadn't owned any at all in the first quarter. The stock has more than doubled in price in the first half, and so far in the third quarter, it slipped 26.4%. So there's a lot of room for rebound here. And Tilray's May quarter was mixed, but a completed merger recently with Afria may have jumbled consensus estimates. Now, the stock got a lift along with its peers when Amazon.com said earlier this year that it supports the federal legalization of marijuana. And this month, Tilray launched medical cannabis edibles in Canada. Tilray showing the absolute most upside of all four companies in the next 12 months, almost 50% upside to a price of $19.67 in the next 12 months. Judging from where it's at now, we're sitting at about $13.16, so that's an absolutely fantastic upside potential. We've got a moderate buy rating with 10 analysts giving it either a buy or a hold. So if we assume that people managing almost $200 billion worth of assets for multiple pensions across Canada, if we assume that they're smart individuals and they're handling that money in the fiduciary responsible way, then we can trust that they have looked deeply into these four companies, know what they're looking for, and do intend on making a profit off of their recent purchase of these stock shares, right? So I tend to follow the professionals' advice when they take these big moves, whether it's a billionaire or a pension fund or a hedge fund. You can't not take a look at what they're doing and see whether or not it fits into your own risk tolerance and portfolio preference, okay? So take this for what it's worth. It's just to kickstart your own due diligence. This is only provided for information and entertainment purposes only. Please do your own due diligence before buying anything. It's not financial advice. But thank you so much for checking out today's second video of the day. Hopefully it does better than the first. As always, I love hearing from you guys, so leave a comment in the comment section down below. If it's Where's Julie, she's on the Tip Ranks channel. And if you comment, I'm going to know you didn't watch to the end of the video. But thanks as always, guys. I appreciate you checking it out. Until next time, bottoms up.